Hi guys, how are you? Welcome to the Global DeFi Summit. My name is Ting from CoinTelegraph China, and so happy to have this panel with Camila from Defiant, and Luuk from Prime DAO, and Aleks from Blockchain Capital, and Helmer from Gelato Network. I think before we kick off the topic, talking about the permissionless composability, supercharging innovation, examples and applications. Why don't you guys give us some brief introduction to our audience, because you are absolutely having great, background in the DeFi space. Camila, should we go from you first?
Sure. Thanks, Ting. So a brief intro on myself. I'm the founder of The Defiant. The Defiant is a content platform focusing on decentralized finance. We have a daily newsletter, a podcast, a YouTube channel, a website. Visit thedefiant.io to subscribe to all of the above. And I'm also the author of The Infinite Machine, the first and most read book about the history of Ethereum. So hopefully you've all read it by now. If not, go check it out. So that's me.
Cool. And Aleks, would you like to go second?
Sure. Hi, everyone. And thanks to Draper Gornholm for putting this together and having me on. My name is Aleks Larsen. I'm a partner at Blockchain Capital. We're an early stage venture firm with a focus on the crypto ecosystem. So we work with both companies and protocol teams and help with business development, help with strategy, hiring, growth, and we're on the ground working on grants programs, treasury management functions, and other DAO services with the hope that we can help DAOs kind of transition to a decentralized organization and then pass some of those learnings on to newer portfolio companies.
Right. Thanks, Luuk.
Hey everyone, thanks for having me. I'm Luuk. I'm a full-time DAOist, have been working for DAOs for about 3 years now. I'm the strategic lead at Prime DAO. We're a Web3 collective that is building DAO-to-DAO innovations with the aim to improving coordination in DeFi, and I also run a small DeFi fund from the Amsterdam Stock Exchange.
Thanks. And last is Helmer.
Yeah, hi. My name is Hilmar. I'm a legendary member and at Gelato Network, and Gelato automates smart contract executions on Ethereum, Polygon, other EVM compatible chains, soon every blockchain near you. And yeah, basically developer use us to kind of outsource the DevOps work to our network of bots.
Cool, thanks. Welcome to this panel. And today we're going to talk about permissionless composability. My first question is, what's the goal for the DeFi composability? We have a lot of innovation going on. So what's the goal? What's the end? Yeah.
Happy to kick that one off. Well, I think there are probably lots of different goals, but to me, the goal of composability is to catalyze innovation up the stack and to drive strong network effects. I think that one of the really amazing things that Ethereum unlocked was this ability to create permissionless, highly persistent APIs in the form of smart contracts. And so a term that I've enjoyed hearing for this is computational amber. And you can think of like smart contracts on Ethereum as persisting over time like spiders trapped or frozen in amber. So instead of having to constantly maintain the API connections that you rely on, developers can run leaner teams and build with more comfort that the ground beneath their feet won't shift. And having that kind of certainty, I think at the base layer, allows for much greater combinatorial innovation up the stack. And in a lot of ways, the past 2 years, I think in DeFi have really been a testament to that. And we've seen kind of innovation compound over time, and where maybe, at the beginning you had some foundational financial products. Today you have things that leverage lots of different, parts of that stack to create new products on top. And so an example that sticks out to me, or I think is very illustrative of this would be Alchemix. And so at the bottom layer, you have liquidity pools, Compound, Aave, Curve, Uniswap. And then at the middle layer, you have Yearn vaults that are responsible for optimizing the yield and reallocating between all of the liquidity pools. And then at the top layer, you have Alchemix, providing basically a cheap line of credit against a Yearn vault. And so because Alchemix's product, cheap credit, was so attractive, it grew fast, and that growth flowed down into Yearn and then into the bottom level liquidity pools that Yearn was allocating to. And so I think something like Alchemix, I don't think is possible without having a reasonable degree of certainty around the building blocks that you stand on. And so that growth and the network effects of having an application ecosystem building on top of your protocol, that would not be anywhere near as powerful without strong composability throughout the entire stack. So that, to me, I think is the goal of composability, and kind of illustrates a good example of where it's been powerful.
Right. And I mean, that's very specific, but I mean, what's the ultimate goal? Are we talking about transiting the whole traditional finance into DeFi? Is that what is this super innovation is going on? With what Aleks just mentioned, and what's your opinion?
I think from my point of view, I come originally from a small Caribbean island where we don't have the innovation skill sets available to create our own financial ecosystem. So we really rely on outside nations, which always has like this dependency on other nations. So for me, it's really empowering people by creating this network that is global, neutral, and permissionless, that any person or any nation can build on. And like Aleks mentioned, where you know that this infrastructure is neutral, it's not gonna kind of disappear under your feet. And that's such a big revolution, because previously this is something that only the largest and most powerful of nations or companies would be able to do. And now anyone can do it from their bedroom, and it truly flips the table of kind of what financial services mean, and really brings these superpowers, because they truly are superpowers, to more people in the world with less friction.
Yeah, and adding on top of what Luuk said, I think you really nailed it there. I think maybe just a really concrete example of that is, I don't know if you guys know the InstaDepp founders. Like, we work together with them quite closely. They're like 21, 23. They have this platform which they built in a hackathon, and which has, I know, 8 billion or something total value locked in their smart contracts, right? And how do they do that, right? They have no financial experience whatsoever. They just plug into all these small Lego bricks that are available to them with like easy to use standardized API, as Aleks said. And what they do is they plug into Compound, and for example, they use Gelato to kind of like automate the liquidity movement of dApps from one lending protocol to the next. And they use Yearn here, and they put it all nicely together, offer a great UX, and then suddenly you have like a bank basically built by two guys. Of course, they have now like a big team around it. But this is the power, I think, that we are having right now. Everyone can become a bank, build financial services. You can, as long as you audit and rely on good quality code that is kind of like vetted by the community. I think like the possibilities are endless. It's kind of like DJs remixing songs every day, and like every day something new pops up. So it's amazing to see, and you can't keep up with the space, because everyone can just try out whatever they want. So I think that's just super fun.
That's an awesome point on DJs. Just to kind of add on to that, I mean, what you saw with SoundCloud maybe like 10 or 15 years ago, I'm forgetting the exact timing, was this explosion of hobbyists essentially, who became, they came up through remixing, and having that substrate and that ability to sort of distribute your remixes, and a distribution channel for it, was really an enabling function for more music. And so I miss SoundCloud. Really excited about Audius to do that in music in the crypto context. But the same applies to the financial space. To your point, giving people a substrate to remix financial applications unlocks innovation. And to the point about the team size, I mean, if you look at fintech teams and what the head count needs to be at a bank that provides financial services, like, you can easily reduce that 10x in a DeFi context by just leveraging the work of others. And having shared protocols.
Yeah, I'll add to the point about just DeFi adding efficiency because of this composability. We recently had a story on the DeFi talking about just this, focusing on Yearn finance. And I think this is very little known, but Yearn right now is producing more revenue than traditional fintechs like Betterment and Wealthfront, like double the revenue. And this is a project that launched early last year or like very recently. And more than that, like Yearn has like maybe 10 like less than 20 people in their team, like in their core team, and that compares with teams of like hundreds of people in like traditional fintech. So it's just amazing, just like the scale of growth that DeFi has achieved in such a short amount of time with a fraction of the costs and the people. And that's largely because of this feature or characteristic of composability, which comes because I think more than a goal, like it's a product. It's like a result of kind of the main the way that DeFi is built, which is on like open source software, and that results in like all this amazing innovation and composability. And sorry about my dog if you're if she's participating as well.
Nice. I like how Alma you talk about it's a remix every day of having like new songs remix every day with the composability here. And what are the new applications that we've seen, these new songs we've seen these days? I mean, we've had Camila just mentioned about Yearn from a year ago, and we have Aave and synthetics. What are the new applications that you've seen that it's quite exciting and they're using this new mix here?
Yeah, if I may add a shameless plug here. So I just talked about the InstaDev guys, like two young founders, right? They actually also just released their token, the INS token, which they distributed via an airdrop, and they wanted to. They don't have any connections to traditional centralized exchanges, so they were thinking about what's the best way to provide like deep liquidity on decentralized exchanges, and of course Uniswap v3 just came out, right? But it's very difficult to kind of like manage these liquidity positions because you kind of like have to constantly readjust the liquidity around the new price that kind of forms on Uniswap v3. And basically what we build, and tying back to composability, is we kind of build like an ERC20 wrapper around Uniswap LP NFT positions, which we provided into InstaDev, and basically they just enabled users to put in all their tokens into this kind of like GUNI, that's what we call it, basically a gelato wrapper around Uniswap. They just put all their tokens in there, and then their position kind of gets auto managed to track the current price of INS to ETH on Uniswap v3. And they actually added like a liquidity mining incentive on top. So they actually incentivized people to put their money in there. So suddenly like all of the tokens that got distributed were allocated on Uniswap v3, and they were like deep liquidity around the price. And you could literally trade like a high volumes there with not significant slippage. And they have now control over how to set these ranges, and they can kind of create like a buy wall around the price, and kind of like say, okay, below here we don't want the price to slip anymore. We can just incentivize people to provide liquidity here, or above here. So it's like a new paradigm for projects to launch tokens, for example. And this is just tied back into us being able to use Uniswap easily, InstaDev being able to use Gelato easily, and like everything together, right? Just like a remix of remixes, basically.
Great. That's a very new type of application. Anyone else would like to share an example?
I think, again, coming from a DAO background, I think what I'm most excited about, it's not something that's extremely new, but something that has really seen more traction recently, is Nodes safe applications. And kind of the second or maybe the third DAO iteration that started. We see a lot of exciting things in the form of Snapshot kind of opening up DAO governance and participation, bringing more people in kind of shared mind spaces and having kind of shared governance governors, which I think is something really important. There's only a limited amount of people that can actively govern things really well and have a good experience in that. And then kind of what that started, this combination of things like Snapshot and with this SnapSafe model being already somewhat able to connect it all together and have it completely on chain. I think what we're seeing is that these different organizations are also getting closer and closer to each other, leading to composability between the contributors and the talent in the space, and moving it away from like silos of like the traditional organization mindset that we all need to work just with our organization, and taking it to more of an ecosystem point of view. And I think that's a really exciting innovation that I'm looking at.
I think it's hard to like to come. I think it's harder to point out to one DeFi application that isn't like composable, because really I think just like setting the stage for like the background for composability is, I mean, the fact is that all of DeFi is a money Lego in this kind of, you know, universe. They're all plugging, like all of these applications are plugging in with each other. So it's like, name one DeFi dApp and that's going to be an example of composability. It's like, you know, like MakerDAO. I think that's kind of like the backbone of DeFi, or kind of like how it started, but they kind of produce DAI. Then DAI gets deposited as collateral in different lending protocols like Compound and Aave. Then that transforms into these like interest-bearing tokens, like CDAI and ADAI, that, you know, people go to trade these tokens on Uniswap, which depends on like plugging into these like hardened token standards. And then, you know, yeah, like Yearn then kind of routes all these tokens traded on Uniswap through these different lending applications to provide the best yield. So it's like every single application is plugging into other applications to create just this kind of like living, breathing, growing organism. I think is, I don't know, just to set like composability background, like everything is plugged into each other, I think.
Yeah, I mean, I agree. How we are talking a lot about these applications, but these also applications are built on, you know, like infrastructures, and most of them are built on Ethereum these days. But we've seen some application like infrastructures are coming up to compete with Ethereum, and these composable smart contracts are written in this, you know, infrastructure. So what is the current competition look like with different infrastructures, and how would they try to attract, you know, or helping the composable, you know, applications move forward in this space?
Yeah, I'll go ahead and start. I think the competition is fierce. You know, maybe a couple of years ago, it was less obvious that there would be a huge block space demand problem. But what we've seen today, obviously, and this was all kind of born out of Ethereum, is that we've sort of hit the limits in terms of what this version of Ethereum is able to provide, and that manifests in extremely high gas prices that essentially prices out all of retail. So it goes from a question of, is, you know, what's the kind of like ideologically, what's the right platform for you to be building on, to how do you treat your users well and provide an experience that's acceptable. And that, I think, is an existential question. And so Ethereum needs to provide that. That's happening via layer 2. I think we've seen the kind of success of things like Polygon. There's a lot of anticipation, you know, around the roll-ups, and the Arbitrum launch, I think, certainly has given an indication that you know, we'll see a lot of activity shift over to more Ethereum native layer 2s, but certainly things like Solana, Binance Smart Chain, even, and some of the other layer 1s have picked up some of the projects that just need this scalability. So really the problem emerged this year, and the market responded very, very quickly. And it's it'll be very interesting, I think, to see how it unfolds. I think my take on it is that decentralization doesn't really matter until it does, and then that's when the kind of real decisions are going to be made. So I think when we have a good landscape of sort of Ethereum native layer 2s that keep some of the promises that Ethereum main chain makes, and they're competing head on with the other layer 1s, that's when we'll really find out where the network effects are going to be strongest. My money is still on Ethereum, but certainly I think it's a big trade-off space, and Solana optimizes for different things. And so if you need to support micropayments, for instance, that is probably not an application that you're going to build on a roll-up even. That doesn't have the level of scalability required for micropayments. And so something like Solana might be more interesting or better suited to facilitate micropayments. I think if not a lot of value is at risk too, that absolutely might be appropriate to use a more centralized architecture. Something that's really interesting that is maybe a new trend that I would expect to see continue is projects building different components of their systems on either different layers or different base blockchains. And so Audius, I think, is a good example of this, where governance and staking is on, as well as the token, is on Ethereum layer 1. And then micropayments is going to be built out on Solana. And so I think that sort of combination of architectures is going to become more common.
Very interesting. And anyone else would like to add on top of that?
I'd be really interested to see what happens to composability when more and more applications are building on different both layer 2s and layer 1s. I think that's kind of an interesting open question that, I don't think we have a good answer for that yet. I think there's kind of the hope that there will be bridges across all these L1s and L2s, and that with better technology that the user won't really be able to see all these hops from different chains, but I think we're not there yet. So like how does DeFi look like in that transition, where maybe you will have to deal with like clunky experiences of like having to change from one wallet to another wallet and keep your money in some bridge for like a couple of days before being able to withdraw, like all those things that are happening now with a very kind of nascent L2 ecosystem. And it's not the best experience, even like with people who are used to dealing with DeFi. I find it very intimidating to just like, I don't know, keep my money in a bridge before taking it out. I think that's very scary. I don't think like retail people, like non-crypto native people will be willing to do that. So yeah, that's kind of what's interesting to me, like as something to watch, how fragmented this space becomes in this transition to like a multi-chain future, if that's what ends up happening. Maybe like there's one chain that will concentrate everything, but yeah, too many open questions, I guess.
Yeah, but I think I'm quite bullish on that. So we are already seeing like for example, we already implemented one system where we transition Aave positions from mainnet to Polygon, and the user literally just has to do one transaction on mainnet, and then you have this kind of like overlap period where funds are credited in the bridge contract, and then they are credited on Polygon, for example, and you can use, for example, something like Gelato in the background that kind of like monitors when these funds are credited, and then send a transaction on behalf of the user, send it to a contract, and then have the complete migration with just one transaction by the user sent on each mainnet. And this is, for example, already live, and so some customers are using that of ours. And I think there it becomes very apparent that like where your money is, on which chain your money is, will really depend on what your interface that you're interacting with will offer you. And they should probably manage that for you. So they should say, hey, if you have like $50 million, you might want to consider, or like the UI should by default put your money on Ethereum mainnet, for example. Or if your funds are like $100, right? Then hey, Polygon is probably the better place for you to get into Aave, right? So at the moment it's still clunky because like MetaMask has a lot of these infrastructure pieces like MetaMask that is very slow in evolving and adapting to this space, though they also picked up some pace, I have to say. But like at some point, these transitions will be seamless. It will automatically detect how much money you have. They will put you on the network you need to be with the respective security guarantees that you for your money will require. And then the transitioning is already, I think, pretty smooth. Like, okay, a friend of mine lost like 20K the other day with a bridge, so not that smooth. But I think it's improving, and we are getting there slowly.
Right. I guess my last question for you guys is, well, these composable applications are quite exciting and there's endless opportunities, but what's the catch? I mean, what's the risks with these kind of, applications?
Yeah,
Losing
so
money is one, yeah.
So I think the risk, I mean, each contract on its own comes with its sort of its own native risk that's specific to how that contract was written. And so if you build a higher level application that leverages 3 or 4 different protocols below it, you're exposed to the risk of each part of the stack that you build on. And so that risk compounds all the way up. And I think it's probably the most it's the most threatening at the highest level. And so if an end user is using one of these higher level applications because of the benefits of composability, they're also exposed to this kind of evil underbelly of it, which is that the risks of the entire stack get rolled up into an overall higher risk profile for the activity that they're engaging in. And that's something that we're just going to have to navigate. I mean, what makes me confident is that we're in an open source ecosystem with a tremendous amount of builders that are super talented, a tremendous amount of intellectual capital and financial capital as well, funding teams that are solving these problems. And so an example of the industry sort of solving this for itself would be Nexus Mutual. They recently put out a stacked risk cover product. They previously were providing insurance just for individual smart contracts. And then things like Yearn vaults became the sort of consumer application of choice. And that product did not really fit with Yearn vaults and the requirement for insurance there. And so what they did is said, we can create actually a product that will cover all of the underlying risks. And they've put that out, and that's been, I think, a popular product and has helped people create coverage for yield farming vaults and some of the products that have really taken off this year. So it's definitely a big problem, but I'm fairly confident that we're going to find many different solutions for it over time.
Cool, thanks. I think we're running out of time. So if you have the last comment, for the last question, that'd be great. Luuk, would you like to wrap it up for us?
I think, Aleks, you pointed to the most important part, and it's this compounded risk. And I think the scariest part there is specifically for the retail users coming in now, not even understanding kind of how this technology stack works, and then especially on the settlement layer, not being able to differentiate between different kind of risk levels. So I truly think that that's something that is partly educational and partly just builders coming together and fixing it. But that's really crucial for us to do, because Hilmar, you just mentioned a friend of mine lost 20K. I mean, I'm pretty sure your friend was, well, it sucks, but life goes on. But there are people that are not as financially savvy that would actually put all their money on these things, and then they could lose their house, they could lose their family, and like there are people that are not as fortunate. So I think we should continue to work hard, and I think we're going in the right direction. I'm super excited about where the space is going.
Thank you guys so much. And thanks Straight for Goranholm for having us, and I hope you guys enjoy the rest of the summit. Thank you.